conversation. Frankly, if you want to know about what this means, what the Adani wholesale transaction means for the sector, for some of the companies involved, maybe, I don't think you need to go any further than the three wise men who joined us today and who will probably try and cover all the aspects. At least me and my colleague Sajid will try and ask the questions which will hopefully give us all the answers. The three men joining us today: Rakesh Arora, Managing Partner, Go India Advisors; Navin, Director Institutional Equities at Edelweiss; and Mayuresh Joshi, Head of Equity Research at William O'Neill India. Gentlemen, all of you, thanks for joining in. Rakesh, can I start off with you? Does the nature of the acquirer lead you to think any differently about the sector before and after the deal? And do the valuations at which it has been done either put an upside cap or a floor to the probable valuations that the sector can trade over the medium term?
Okay, so Neeraj, I will take the second question first. It's a simpler one. I don't think it puts a cap. Actually, this deal is a very big and a complex deal. And I think the seller didn't want to take any chance with the regulatory issues in India. So they have grabbed the best deal from a regulatory standpoint of view. They haven't really tried to maximize. I think the fair value would have been, according to me, more than $200. That would have been a fair value. So it's been sold below fair value. And I'll not be surprised if details pour out later on who bid what. Maybe competitors like JSW would have bid higher. So I'll not be surprised if that happens. So I don't think it's a cap. I think it will be a floor for at least Ambuja and ACC stock price going forward. So currently they are trading below this, but as we get closer to open offer, this will become a floor price for both these stocks. Now, coming to think about the sector per se, especially in view of Adani. See, Adani has shown monopolistic behavior in other industries where they are. So, and in the press release also, they mentioned that they want to double the capacity in 5 years. Now, the question is whether they will do it organically or inorganically. In the other businesses, they're not shied away from acquiring other companies. So I would think it will be a mix of both organic and inorganic. Ambuja and ACC together, they've already laid out a plan for 100 million ton in next 5 years. So that is already there. That much limestone is already there. And so from 66, which is now being termed as 70, going to 100, the plan is already there in action. So that leaves another, 40 million, which could be partly inorganic, partly organic. Adani Cement itself had acquired some limestone leases. So that could also come into equation. So I don't think it's totally out of whack when they're saying they will double. Now, the big question everybody is asking is what will happen if these guys are going to be so aggressive? Will there be, fight for market share and, pricing would take a backseat? There again, I think, whatever we have seen of Adani, they don't really do predatory pricing like, what you will see from the other, like Ambani, etc. So I'm not too worried. They will do a balancing game and they will do more inorganic. They'll do, whatever they can do organically at a cheap cost. And so it's a win-win situation for the sector because you've got a big advocate now with the government. So your issues on, pricing, CCI, it's all, history. And a duopoly of Ultratech plus Adani is what is the likely scenario in the next, 5 to 10 years.
Navin, do you agree with that assessment?
Yeah, I mean, see, you'll have to just, like Rakesh said, there has to be a balancing act, and let's really hope for that. But initially, I do expect some bit of let's say adjustments or as we say, because nobody wants to give in their market share so easily, and especially at a time when companies are having, in general, the sector has reasonably strong balance sheet. So yes, eventually, yes, everybody expects, I think, that prices will be at a rate which will be remunerative for everybody. But initially, when you are trying to expand and show that flex of muscles, people don't want to, in general, lose that market share. So I'm expecting some disturbance or turbulence in the initial phase. Hopefully, it should even out much faster.
Mahesh, Navin expects some kind of turbulence, but cement works in a very regional manner. The prices work in a different manner for every zone: north, south, east, west, central. Do you see this kind of turbulence indeed coming in, or could be uh, in areas where they have to retain their market share, like east and maybe north, where they have the combine has a higher market share. They want to maintain that at that level. You'll see some pricing competition coming in, while in the other sectors, it could be more of an inorganic growth like West and South.
So, Sajid, I think price increases or expectations in terms of maintaining price stability. I think with the deal that has gone through, I think that can probably be a base case scenario for the industry to probably maintain that. Now, whether Adani as a group aggressively tries to push for that, my own sense is that it might not happen at this point of time. So I think the pricing power that probably remains in certain regions, and you're absolutely right. I think certain regions will have that pricing power within them. But entirely, I think as the law of economics goes, I think it's entirely balanced in by demand-supply dynamics both. So I think with infrastructure development taking place, the demand factors and the levers are very much in place. With the consolidation that is probably happening in the industry itself, I think pricing power should sustain largely across regions. Central region, as a case in point, Sajid, has always been a sore point, and the eastern parts of India as well. But with consolidation coming through, can these regions show some amount of resilience? My own sense is that pricing power should get maintained. And overall, with consolidation, I think the industry probably will look at a better pricing ahead. Historically, Sajid, as I was looking through the last 12 to 15 years, if you look at a compounded annual increase in terms of cement prices, they've hardly been 2.5% on an annualized basis. So I think you can probably maintain or expect that range to probably get maintained going forward.
I mean, do you see the growth coming in terms of volumes or in terms of capacity inorganically in specifically in South and West region? The market share for these the combined entity is little lower than the other two regions.
Yeah, South is a possibility, and of course, I would also like to mention when Adani says that they want to double capacity, 5 years is then a little less of a period, given challenges around regulatory. And also, to that extent, South, I think, becomes extremely lucrative from an acquisition point of view because, as you rightly said, ACC Ambuja combined the market capacity share or market share in South is amongst the lowest. And there, the valuations may not be very rich. The ask for valuations for any acquisitions may not be very rich, and plenty of assets available also, as in for these kind of. So, South, I think, clearly looks to be amongst the low-hanging region for Adani as a company to begin with for Roman acquisition.
Is it now fair to look at the entire cement play as part of logistics play that Adani is also trying to build, supply chain, whether ports, airports, or other warehousing or other supply chain, which it is getting into, and it's trying to get a major market share there. Is it going to be a kind of a play where their assets will be linked to the kind of supply chain and the logistics play that Adani can offer and bring in synergies?
So first and foremost, Ajit, cement is a logistic game together, right from beginning to end, from where you get the limestone, from where you get your coal, and how far is your target market. Cement is nothing but a logistic. What Adani can possibly bring in is more efficiencies in terms of, like, instead of using more road network, they can try and leverage on their port network, so to say. But again, there are limitations to it. Because even if you supply by port, you meet only demand of coastal areas, whereas ACC Ambuja have plants which are like, you have markets which are in landlocked areas as well. So certainly you cannot do a huge change to that logistic mix which the company is pursuing, because after all, if that was always an option, why would Holcim not explore it? Because they already have some port-based plants and jetties where they are trying to use it to the maximum. But there will be limitations. What Adani brings is certainly the capabilities can push this further. That is one. And secondly, more importantly, I think the fuel sourcing is what Adani could clearly bring in, be in terms of getting any cheaper coal per se, if at all they can, like, get it, or at least coal at even if it's at an arm's length, at a assured supply and assured price, if there is an agreement from a longer term. So certainly, I think in general, it is very fair to assume that Adani will be able to bring in efficiencies much sooner and much faster than what Holcim could have brought. That's very fair.
Rakesh, what about the promoter? I mean, Holcim was the promoter of ACC in Ambuja, but it wasn't a direct and aggressive promoter like Adani would be, right? We've seen in Adani companies how aggressive they have been in going out, expanding inorganically or organically, raising funds from global markets, including capital has not been an issue for the group to expand. Do you see that kind of change coming in ACC in Ambuja style of functioning or working going forward?
It's kind of life comes back in circles. So Ambuja started as an aggressive company under Mr. Saxena and Mr. Neotia, and then we had a patch where things didn't really move once Holcim came in. I'm really surprised that the street hasn't really upgraded the numbers. I saw a few notes. I think the numbers will be upgraded minimum by 10 to 20% for next year, just because Adani has come in and they will push aggressively. One is that the royalty which was being paid to Holcim goes away. Secondly, they have a lot of waste heat recovery, power plant under construction. That could be really fast tracked. Number three is that, as Navin rightly mentioned, coal sourcing. I mean, who can beat Adani in coal sourcing? Meaning there could be a meaningful change in power and fuel cost. And on the logistics, meaning while Ambuja had all these jetties and they were the first movers when they bought ships and their own jetties, but they were never able to get jetties across South Asia. I mean, there's a 6,000 kilometer coastline which India has. But Adani's can build jetties on will, at least under the new, under the current government structure. So imagine what can happen if you have renewable power in Gujarat, you are building big capacity in Gujarat and shipping that clinker across the coasts and, building grinding units. You can conquer India like, which you only dreamt of when you were in Ambuja. So the scope to reduce cost, to be able to grow, to bring in a competitive advantage is huge with Adani. And that's why we are so excited about this acquisition. I mean, the capabilities which are coming together, massive upgrades will follow for this company.
Okay, guys, because we can't go on forever, I have a quick round of questions. We've looked at it from the Adani and group companies perspective. I won't take too much time, but just what I would like to probe what it means for the others in the space, right? And quick 30-second answers if we can. Mayuresh, start off with you. A quick answer. What does it mean for the others? What does it put a bit of a cloud upon the other valuations, or do you think the sector can grow along with ACC Ambuja together? Mayuresh, you're on mute.
Oh, it definitely can, Neeraj. In fact, the smaller players, as Sajid was also mentioning, in parts of Central, South, or East India, I think they'll remain in focus because the intention of the Adani Group is very clear, as Rakesh put it. They want to double their capacity to almost 140, if you assume 70 at this point of time. And therefore, I think the smaller players definitely come in focus. What it also means is what they have probably paid at $180 on an EV per ton basis. If they acquire the smaller players inorganically, let's assume that at a much smaller valuation, the blended acquisition for all these capacity put together might come in the range of 140 by 150, which is a little bit higher than replacement cost, but not too high for the bid they put for ACC Ambuja. So I think the smaller players will definitely remain in focus.
Okay, Rakesh, same question to you. You are optimistic about about ACC Ambuja. What about the others?
See, in the others, there are two categories. One is the large players like Ultratech, Shree. The growth premium which market was paying them will reduce a little bit because you have another company which can do much better. So growth premium will shift. The smaller companies, I think inorganic acquisitions will take some time. It's not going to happen in the next 12 months, maybe not even 24 months, because Adani is new to this business. They will settle in. There's a lot of low-hanging fruit within what they're acquiring. So first, I think that will be the priority, and then after 1 to 2 years, probably the next leg of inorganic growth can happen. So not immediately there won't be any major re-rating. There's euphoria right now, but it will die down. But little bit de-rating of Ultratech and Shree is not ruled out.
Screen showing that. Navin, my final question, and then Sajid might have one or two more, but my final question to you, and that's on the same lines. What has your think tank and what is your personal assessment about the other companies?
I think there is clearly more clarity needed in the sense if Adani says that they want to expand organically because they have Adani Cementation, which has mines, maybe Adani Cement, which was a subsidiary formed. So if they are planning to expand organically, then I think certainly there is cause to be worried. And one of the things which Rakesh pointed is the valuation premium, which can shrink a bit in case of Ultratech and Shree. So that clarity I think is very important because go the other way around. Per se, because of acquisitions and acquiring companies to double that, then it means significant amount of consolidation and the picture certainly changes altogether. So we are having it's completely, very honestly for me, it's still a 0-1 game. Why even for the sector, even for the company for that matter, Ambuja, great. Efficiency will come in because of Adani, great. But what happens to the debt of that entire amount? Where does that get housed? If there is a structure tomorrow wherein the debt comes in where the assets are, then suddenly what the asset starts looking at 6 times and much more than that net debt to EBITDA. So that also then is a concern. So I'm saying we need clear-cut answers from Adani to be very sure of the call that we are taking.
Navin, Navin, to take this forward, do you see if at all Adani goes ahead with the inorganic kind of growth, do you see Ambuja and ACC to be the vehicle for this growth, or will it be through the Adani vehicle?
They have 10 between ACC and Ambuja. There is 10,000 crore of cash that they have. Certainly, that should be the preferred vehicle. Why should Adani use their money? They've already used it for the buying the stake. Second is between ACC and Ambuja, there is almost another 6,000 crore plus. Incrementally, it will increase as capacities come, but 6,000 crore of EBITDA which comes to the table every year. So certainly, ACC Ambuja's balance sheet or cash has to be leveraged for making any acquisition. That's a no-brainer.
Do you see dividends coming in higher from ACC Ambuja now because of this?
Dividends should stop. Dividends have to stop. It was Holcim who was willing to take dividends or offer dividends because they had the maximum stake. If you are trying to grow on one hand, dividends have to stop.
And you think that will happen? Because we saw the same thing happening with Vedanta when it acquired, because the parent acquired it and there was a debt that needs to be serviced. So the dividends was again going to the parent, right? So we don't know the financing structure as of now, but at some point in time, the intention would be to service the debt using the dividend that's come from the companies, right?
That's one way to look at it. But the first thing that Adani did after acquisition is announcing a target to double capacity in 5 years. Let's not forget of that as well.
Avresh, your thoughts?
No, so my entire sense is that they have to manage their balance sheet well now, Sajid. To take Rakesh's and Navin's point forward, I think the inorganic growth, I think Adani will just try to probably gestate these assets first. But what really happens, Sajid, is the smaller companies that I was speaking about, I think the 2 bigger players or 3 bigger players, leaving the smaller counterparts in the regional areas, Ultratech, the Shree Cements, the Dalmias in the world, they are probably a little bit on the back foot at this point of time with their bids not going through. And does that lead to a sense that in the next 12 to 18 months, probably they have a chance to look at other smaller companies to probably consolidate their market share further since they have not got these assets? So I think there will be a lot of due diligence that is probably going to happen for the larger players outside ACC Ambuja, which is now the Adani Group, which will happen as the approvals come through. But do these larger players have a serious thought in terms of upping their market share, acquiring companies? And therefore, I think the debt on these companies goes higher. And therefore, my own sense is that the enterprise value for these companies with higher proportion of debt, if any acquisitions happen in the 12 to 18 months, cash outflows and dividend outflows might just lessen over a period of time if this competition probably happens.
Gentlemen, frankly, we can go on, but understand there is paucity of time and you guys have other things to attend to. So we'll call it a day here. Thank you so much, all of you, for joining us with your thoughts.
Thank you.
And viewers, thank you for tuning in. Standard disclaimer, the Adani Group is in the process of acquiring 49% stake in the parent of BQ Prime.